All right, folks, good morning. Welcome back. New month, new lessons. So before we get into it, I have a couple things I want to mention on a personal note that will affect our schedule slightly. So I want you to be made aware of it so that way you're not mad at me if we're not as active the latter portion of this particular week we're in now, but it's unavoidable. So as you know, I have 5 children, and one of them I have to have a personal thing done with them, and we have to leave the state to take care of it. So it's not life-threatening or anything like that, but it is required for us to go there. So we have to go down into Georgia to take care of something. So depending upon the outcome, I may be there all the way till Monday. We have to leave here Wednesday evening, and it'll probably impact me in terms of live sessions, but I can give you content and things to work with through the remainder of Thursday and Friday. We may be a delayed start on Monday, and we'll be probably like a 9 o'clock session on Monday morning, even if I'm delayed and kept there. But Tuesday we will be absolutely, on normal schedule next week. So again, I don't want you to be alarmed that, oh no, I'm not doing what I'm supposed to be doing. I just want to make you aware that we will have live sessions today. We'll have a live session on Tuesday, and on Wednesday, I got to get with my wife today and find out exactly what time we're leaving out of Maryland to start heading down there. So we have to be there at 10 a.m. Thursday morning. So it's an all-day procedure for him, and whether or not they see anything that needs to be done beyond that, we'll know then. But they assure me that it shouldn't be anything longer than the weekend. He has to do an observation. They're checking him for sleep apnea and some other things that may be going on with him. So that's the business with that. So if you don't mind, keep us in prayer. I appreciate that. So, all right. Yeah, I can send some tweets. I'll worry you guys. I'll be antsy probably the whole time I'm down here, so just be aware. All right, so again, we did a new outline for this month's content, so you can get a feel for what we're going to be looking at. I'm going to go into greater detail with day trading, and obviously for scalps. You're going to have a lot of drills every single day. I'm going to give you something to work with every single trading day. I'm going to give you something to outline and work within in terms of intraday. And I want you to also reflect on each one of them, how they could have been used for a longer term setup. Some of them won't be, but some of them will be. Okay. The first 2 weeks of this month will be more interactive than you ever had. And then the second half is literally you're going to have to copy everything I'm doing verbatim. So that means where I put my entry in, where I put my stop at, where I take my target, you need to do the same thing in your demo account. Okay. So we'll be a lot more busier than we have ever had. I'm closing the entire Forex portion of our teachings closed in this month, except for the little nuances that I do in August. You're going to have everything with timing, entry, all that business. It ends this month here. And then next month we're going to be doing the commodity, day trading the S&P 500 and the bond, and the stock stuff. Each week we'll have that broken down. And it'll also use the commodity stuff in conjunction with what you know in Forex. And I think July is Mega Trades, where we go through how to find the big setups for each year. And in August, we do the templates for PDF files, all the flow charts that lead to what you should be doing. The main one this month is the last one, Lesson 8. You're going to get exactly what I do every single trading day. And I'm going to start with the actual of doing it. So the lesson itself won't be like a PDF file. It won't be like slides and all that other stuff. It's actually going to be me. Okay, here's a live session, and this is what I start doing. I go through all of the stuff. I go through all my charts. I show you what my charts look like, what I'm looking for information, determine what my daily bias is going to be, what I'm aiming for, what frames to set up, what template am I using for that week, all that business. So it's a lot of stuff. So you have to pay a lot of attention to that one in terms of just watching the video. It won't be a way for me to, and believe me, I've thought about how I could do it, but this is too much work for me to create PDF slides for it. the video itself will be pretty much self-explanatory. All right, so that's the business. Today's economic calendar, as you see here, we have a 10 o'clock high-impact ISM number coming out, and then we have 10:45 Treasury Secretary speaking. Apart from that, pretty quiet, nothing terribly exciting. I see the core price index and personal spending. That might cause a little flutter in the marketplace, but I think if anything happens, it's going to be at the 10 o'clock hour, between 10 o'clock and 10:15. So let's go over to charts real quick. Okay, and we'll come back to Aussie in a minute. I want to start with the dollar. Okay, so dollar still in its trading range since we gapped down last Sunday. Hasn't really found its way out of this range. Now, I have a small little fair value gap outlined. Let me get this over here. And we have a short-term low. Now, we've already went below the short-term low. I would have rather seen it come down and hit this, closing that little bit of remaining gap. Then I would have expected a little bit of a pop. I was looking for this type of move after hitting here. It didn't hit it yet. Doesn't mean it can't come down and hit it and then one more time, but there's a large pocket of buy stops resting above last week's high. And I noted last week during the chart recap the levels I was looking for, which was mid-gap and full gap closure. So that's the idea I'm looking for. Should we get up here? Now, I'm not trying to call the move. I'm looking to see if it shows it today. If it gives us signs that it wants to turn around and start making a run, that'll give framework for the remainder of the week. It's certainly for Tuesday's London Open. So let's go back in here. We're going to be looking at this candle. Now, again, it's going to look different on yours, but just follow along in the Forex LTD demo and then find out what that candle is on your respective time frame in your own platform so you can study it on your live feeds. But this is the gap closure I was expecting for this morning to see a potential New York reversal and maybe a run for London's high. And then these equal highs up here, large pocket of buy stops resting just above these highs. So we'll have that under our microscope today to see what happens. Again, not rushing. New month now. So we'll see a lot of sentiment ideas, which is one of the first lessons you're going to get. Euro pound. Took out the sell stops below here. Closing the gap. Still a little bit sideways. I think that this is probably going to stay in a range for a few more days, at least probably up until Wednesday. And with that being the case, we may see symmetrical trading with euro and cable. It means they may be trading in the same direction, which is always fun. Euro dollar. We had a little bit of a move. It would have been nice to see it come down here and take out this New York session low, but it didn't quite get there today. So again, it's a little bit of a consolidation day, looking for buy stops and sell stops respectively across the pairs. The exercise I gave you as homework to look for a buy scenario, a sell scenario, and one where it failed using the 0 GMT starting opening price. I haven't gone into the forum yet, so I'll be there this evening. So once I get done with the chart index today and the daily recap, then I'll spend this evening going through it and checking out what everyone has posted. But we also had one in Aussie dollar that I'm going to outline. So this is going to be like my version of showing where one did work. Then I'm going to give you another one for the sell side, and then I'm going to show you where one of them failed, which I was watching, but it'll be in the recap today. So my homework contribution to last month's lesson will be in today's daily recap, but I'll give you the buy side one today. It's in the Aussie. The euro, I think it's going to stay sideways as well, in conjunction with the euro pound and the dollar index. Until the dollar index either takes out convincingly the fair value gap on the downside or takes out the intraday high here, we're going to be without direction. So we can probably trade in a range defined by London's high and this fair value gap. Until that is breached, one side or the other, it doesn't make a difference to me. If we go down below, then we're going to take the sell stops below here. So that'll give us a low resistance, low liquidity run for the intraday scalp scenario for that. Or if we break London's high, that'll give us a bullish order block to retrade back into, and then see expansion go for the buy stops above the equal highs, and then maybe hold a little piece on for the gap closure. That's the two scenarios I'm looking for dollar in terms of the analysis and how that relates to the foreign currencies. Obviously, you know what that means. If we below the fair value gap and we're reaching down here, that's bullish for foreign currency, euro, and cable. If we reach up here, taking out London's high, that means it's going to be bearish for foreign currencies, euro, cable, and Aussie dollar. Cable, similar thing. I'm watching this gap up here. We left equal highs here just in recent market action. I think personally that we have capitalized some buys here off this order block, seen buying here. We left equal highs. So they're letting buy stops fill here, and they have this gap closure idea that could happen that may see price shoot up into that level. I don't see a buy to do it. All I want you to do is observe and see what happens. Dollar CAD, similar scenario, sideways consolidation. New month, put this in your notes. This is a notebook highlight. Every new month, the first Monday and Tuesday of that new month can be very, very dicey. It can be consolidated. You don't know what is going to happen those first two trading days. When a month's always starting on a Monday or a Tuesday, generally that also will be a general theme. In other words, you always expect a Monday to be somewhat of a consolidation or maybe a immediate run to a stop level would give you the Judas swing idea for the week. On new months, treat it as like an Asian range, okay, where we expect consolidation. Expect Monday and Tuesday, or at least the first portion of Tuesday's London Open, going into New York Open on Tuesday, New York time. That can generally be consolidation. So if you're not careful in that consolidation, there may be a particular price swing that may set you up expecting a continuation on the upside, and that will be the false move of the week, which also sets the tone for the month. So always be careful. Don't be in a rush just because it's a new month. Don't be in there trying to get excited about taking a setup on a Monday if it starts the month, or a Tuesday if it starts the month, because they can end up becoming many times a very unprofitable day, where it may look like you see a setup there, but it just goes into consolidation. So basically, in summary, in layman's terms, and make it very clear and easy for you, in terms of market profiles, when a month starts, a brand new month starts, if it's a Monday or Tuesday, those days tend to be consolidation or Z days, where it just goes up and down, and it keeps hovering back to the middle of the range. What it's doing is it's building, okay, allowing the float to build up above and below the marketplace. And when that takes place and builds up enough orders, they'll then make an attack towards where the most money is. And that's generally what you're going to see. So always have that every time we start a new month, if it starts on a Monday or a Tuesday, those days tend to be classic Z days or narrow consolidation days where don't rush it. Just wait for them to put in their price action, and the very next day, in this case, it would be Wednesday, but we'll have ideas going into London session tonight also, regardless of what transpires, because we're going to be doing scalping now, so there's always something to work with. But because it's scalping, I want to make sure I keep this in the recordings so that we know the tone of the entire month. London session will always be pre-recorded. I'm going to give you the outlines I'm looking for, okay, and I'm also going to start giving you charts that come by way of the 8 o'clock hour my time in New York. So around an Asian time, you're going to start getting posted charts on all the pairs and what the outline would be. If you're avoiding getting up and waiting for London, this is how you would play it. When you get up, if you want to be up for London, you're going to have that video given to you between 12:30 and 1 o'clock in the morning. So it'll be a pre-recorded session. So that way everybody has the information at one time. I'm not staying up all night long, and I can do my own setups too, and we can review the outcome. New York session, every single day will be a live session with the exception of what I said later on this week. And then we'll also have the second half of the month. I'll be back with you again during the London session. We're going to spend the entire London session together. So the last 2 weeks of this month, I will be with you the entire London session, and then I'll just do a pre-recorded session for New York. So I'll leave that, I'll reverse that schedule. So again, in summary, so you understand what I'm talking about, the first 2 weeks is going to be highly drill oriented. I'm going to tell you, what you should be doing, and then you need to do it. Then the second week, we'll be spending the entire London session. That means from 1 o'clock in the morning, okay, to probably 4 o'clock in the morning. Okay, it'll be a 3-hour session. The entire New York session will be up to you based on what I gave you in terms of pre-market analysis, but the London session, I'll be with you in the entire session. Both, I'll show you why I don't do London sessions on Monday. So we're going to be up on Mondays, the last 2 Mondays of the month, and the entire week, all the way into Friday. So you'll have an entire immersion with me in London session. So I'll be able to tell you what scenarios I think is going to unfold, what profile should unfold today, what stop run should be happening, what's the daily template, how's it going to work in the weekly profile, all that business. So you'll get to see it. I'll think out loud. I won't be trading live funds that week, so that way I can focus on what I'm seeing. I won't be trying to do 2 things at once. So my focus will be entirely on what you're seeing. Okay, so then that way 100% how I go into the Forex market, what I'm looking at in London, how I dress the whole thing up, and how I use the templates going in from day by day by day. And you'll have a very jam-packed, content-filled month. So, like I said, dollar CAD. This one's consolidating as well. I don't think it's done going up. I think it's probably going to go a little bit more higher than this, but I don't think we're going to see it today. I think we're just going to tread water, go sideways a little bit more. It would have been better had it gone down below these lows in here, I felt, but it didn't do that. So we'll see if it wants to hug this consolidation, the range high and low here. So if we stay in consolidation going into today's close around 2 o'clock New York time, that will give us a lot of framework for the 8 o'clock hour tonight and also going into London tonight. All right, so Aussie dollar. Okay, so this is a framework where you can see how it worked based on what you learned last month's content. And it also refers back to the thing I taught in regard to swing highs and swing lows. I have the daily delineations on. Okay, this is Friday's trading, Thursday's trading, Wednesday's trading. So we had Wednesday's low here, Thursday's low here, and then I said that we would probably cap the week, wouldn't go lower than Thursday right here. And there's your classic New York capping of the weekly range. So we had price moving lower, 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 lower. On Thursday, in a down week, New York session tends to cap the day of the weekly range. That's why I said in the recording and live session, whatever it was, that this would probably not see it go lower. We did come down, hit an order block. Trade off, I said we would probably see 74.90 before the close. It went to 74.91 and not go any higher, but they would be aiming for the buy stops. Buy stops seen here, here, and now we also have the fair value gap up here. The last month content, I gave you one of the easiest ways to work with daily ranges and trade entry. Some of you probably missed the whole point of it and figured, well, you didn't give me a lot of charts and a lot of examples. You gave it basically to me to go find. Yeah, because that's where you're going to learn it from. I can give you all kinds of examples, but it won't change the fact of the aha moment that comes when you start looking at it in your own charts. If we have the low on Thursday and we anticipated Friday not creating a lower low, what does that create on the daily chart? Obviously, I'm asking rhetorically because I'm not looking at the questions. You should be saying a swing low. Swing low is a low with a lower low and then a higher low. In other words, one swing low is one day with a higher low to the left of it and a higher low to the right of it. That's what we're seeing here. Whenever you see that scenario in any market environment, if you see that, if you're going to be a scalper, this is a very, very easy scenario. Very easy to set up, very easy to reach for in terms of opportunity, and it doesn't need daily bias, okay, because you're creating a swing low on a higher time frame daily chart. In this case, we have a low on Thursday with a higher low here and a higher low here. So we have that low, and that low. So those three lows, one being in the middle, most lowest, or the lowest of the three, to say it that way. Okay, that is where we don't believe the market's going to come back down to that level again. This low here sets the tone for the signal. You find the swing high prior to this higher low. In other words, once you have a low here, you anticipate it. Once this low starts showing willingness to go higher, all you do is go back to the high prior to it, and that's seen here. So you have this high here. This is your trigger swing. Forget all this business over here and over here. That's no longer important for now. What you'll look for is the market to go above this high, which is what I outlined on Friday's recap. I said we would probably see 74.90 traded to, and they're going to aim for the buy stops on Aussie dollar. So what do you use for this condition? Well, if you have this in the market, based on what we learned in April's content, we don't need to get up at London. We don't need to sit in front of the charts all day long. We don't need to worry about New York session. All we need to know is what is the opening price. Well, if you go over here, there's our 0 GMT, Forex LTD. Now again, you need to find out what that is in your time frame. When you start trading on your own, you decide to do that with a live account. But right now, while we're teaching the mentorship, it's always in demo. So everything I'm saying here is demo, demo, demo. Okay, so we have this candle here. The opening price comes in at 74.84. So 74.84. Okay, so there's the opening price. I already know that they want to target buy stops based on my market commentary last Friday. They're going to want to take these buy stops here. The trigger is this swing high here. You want to see it trade through that. That's your market structure break. Only thing you need to know is what's the opening price at 0 GMT. That's here. The filter is you can either buy it at the open and use average daily range over the last 5 days, or you can buy below that opening price 10 to 20 pips below that. You can wait for a movement to go below it, and then you can do the buy there. In this month, I'm actually going to give you specific trades where it looks, where you can look at it, you can see it graphically, where you'll have a template where you basically look at price. Is it doing this? If it's not doing this, then I'm probably not going to take that trade. And it really ferrets out all the days where it could be dicey. It doesn't work all the time. You'll see why I don't trade every day by doing the things that you do in May's content. Not every single trading day has the opportunity where you want to put live money on, but there is something for you to be practicing and testing. And that way, when you go into the idea of, I would be a buyer because I want to be buying, but I don't feel that it's a strong buy, but I still practice in a demo account just to keep myself in tune with price. There will be scenarios that you'll be given this month in specific templates. There'll be highly detailed charts. Everything's outlined so you know what I'm looking for. So the actual criteria of what I'm looking for in these types of events, it's spelled out for you. Like, it's ad nauseum. I held it out for this one because we're done all the entries, the techniques of taking the entry in either a long-term, short-term swing trade or position trade. All those ideas, they can mesh really, really well with this month's content. Because it's also teaching scalping, I'm teaching you how to take some portion of the move out. That could be a scalping. You leave portions on for the longer position, or simply just scalping because it's not going to be moving around much. So if you're in a big long-term consolidation environment like we're at right now, you'll just be in there. It'll be like a salad days for you. You'll be in there taking all kinds of setups. But I'm not trying to teach you to be 15 trades a day. You're still going to be looking for 1 or 2 tops. Maybe 3 on certain conditions, but generally 2 trades intraday per day. Once in London, once in New York, and maybe something in New York close that sets you up for a move going into Asia, into Frankfurt. But again, you'll learn all that. But the criteria is if we simply buy at the opening price at 0 GMT, why are we doing that? Because we anticipate the buy stops, like we said on Friday's closing comments, the buy stops above here, the buy stops above here. We have a fair value gap in here that's not mentioned here, but we have this one here. So if we're buying, we want to be buying near the low of the daily range or just below the opening price. So if you're looking at, let me ask you this. How many of you are available during 8 o'clock New York time for 5 minutes? The majority. I haven't seen anybody say no yet. So yeah, I mean, this is a really, okay, I got one no. All right, Jackie, you're out of here now. You had to ruin it, didn't you? You had to go and screw up the record. No, anyway, it's okay. At that's it, it's an immediate ejection. All right, so at 8 p.m. New York time, all you need to do is just set your alarm. If you can't be awake at that time, just set your alarm to wake yourself up around 7:45 New York time, and then wait for what the opening price is at 8 o'clock. Whatever that opening price is, what we teach you with market sentiment this month and how to determine whether you're going to be buying or selling, it removes all of the chain yourself in front of the monitors. If you remember back in the free tutorials I did, okay, the very first lesson I taught was how everybody thinks that they got to be sitting in front of the charts all day long. And look what we've done in the mentorship. You know, pretty much we force ourselves in front of the charts a whole lot more than is necessary. So has it proven fruitful? No, I'm telling you, it doesn't do it. You need to know what you're looking for and what time it's going to occur. Their IPTA will work like clockwork. It's not ambiguous. It's not, well, I wonder if it's going to happen today or if it's going to happen at this time. You know exactly what you're looking for. You know there's two trigger times, midnight and 0 GMT. If you can't be awake and you know you want to trade London, but you just can't be awake, I guarantee you, you're beating yourself up. You're thinking, I'm probably not going to be as successful because I can't trade London. I can't get the higher low of the day. Yes, you can. And you don't even need to be awake during London. Okay? Remember, I told you there's many times where I'm not up at London, but yet I'm taking participation in it. And I use the basis of the 0 GMT starting opening price to frame where my limit orders are going to be. Once in a while, I'll get up and see if the context is still in alignment with what I see at 8 o'clock. But if I don't want to wake up and I just trust the orders the way it's going to unfold, then I just let the trade go by itself. It'll fill me. The stop will be in order. I ain't worried about trailing nothing in London anyway. And I have my first profit objective to be taken once it gets to a certain level. And then I'll wake up hopefully at 6:30 in the morning or whatever, get ready to go into New York, and either I'm adjusting the stop, taking something else off again, or looking to collapse the trade because I may see a reversal. So, and we're going to be talking specifically with market reversals this month. But you have an opening price at 0 GMT, okay? I'm going to play devil's advocate for a moment. And let's say, for instance, we're only buying right at the opening price, okay? And we don't worry about any movement below the opening price. Hang on one second. Okay. The opening price again comes in at 74.84. 74.84. And the low of the day comes in at 74.74. Okay. So if you're buying at the open and you're using the average daily range, let me ask you a question. On all your data platforms, I'm going to get a consensus that everyone's specific. Hang on one second here. For average daily range on the last 5 days on your data feed, tell me what your 5-day average daily range value is for Aussie dollar for today. I see 163, 51, 52, 52, 52, 49, 40, 61, 60, 52. So it's a range between 40 and 60, depending upon what data provider you're using. Okay. Now, what do we have on Forex LTD's 5-day average daily range? You'll be getting the average daily range indicator on this month if you haven't gotten it, but most of you have it. Forex LTD 61 pips. Okay, so if we're buying on Aussie dollar at the opening price at 0 GMT, our stop loss order has to be roughly 60 pips. Now, if you think about this for a moment, what we're saying here is we believe that the opening price should be at or near the low of the day based on the analysis I gave you Friday, that we're going to be looking for the gaps to be closing up here in the buy stops to be taking. Because they've already hit the weekly low in here, we had a higher low here, and they're probably going to want to take the buy stops based on what we outlined. So even if it wants to go lower longer term, it can still come up here and grab all this stuff and still resume lower. It doesn't mean it's a long-term trend reversal. I need a little bit darker color than that. And let's use it as red or orange red. That's good enough. So average daily range takes us, scoop it down here. So your stop loss is well below Thursday's low. You're buying here, okay? And all you're doing is you're trying to capture pips. You're not trying to get 20R, 10-1 returns. You're not doing anything like that. If what you're seeing in the price action suggests that you should be a buyer, as we are outlining here, that's your stop loss right here. You're well beyond what would be reasonably expected as static price action grabbing you. They're going to want to have to take price considerably lower to get to where your stop is on this right here. If you take half of the average daily range, 50% of the average daily range, that means that you have to be 30 pips. Right there. That's where your stop loss is. It's also above this low, which would be normally unnerving for some of you. But the context is we've already turned the tide with this short-term high here. Right there. So this is your range. You buy. Now, if you are up at 8 o'clock New York time at 0 GMT, if you see that opening price and then you see price drop down away from it, what can you be doing in that condition right there? What would you be looking for as it drops? You just looking for any old price level, or are you looking for something specifically? Like, what would you be looking for? Well, think about what you're doing. The framework we gave you for Friday was they're going to be looking for the buy stops on Aussie dollar. So that means the direction is up. So if we're bullish, what do we look for to frame the long off of? Discount PD arrays. Very good. So this movement in here, let me zoom in a little bit more. This movement in here below the opening price, it's taking out this short-term low and it's trading into this. What are these three down closes in here? They're all one order block, okay? If it was a 45-minute chart, we would see this as a bullish order block, all one block. Now, I gave you specific rules to look at when we frame the context of buying and selling at the 0 GMT and at the London session, midnight. You want to look at the price swings in the latter portion of New York, okay? There will be sometimes there's two stages of swing. For instance, like we have this low here up to this high. But in between this high and this low, do you see that secondary swing? I'm going to outline in a second, but before I do it, can you see it? This little one here to here. You see that? If we take the fib, and I want you to go back and look at all the major pairs and do this for the last 2 weeks. every major based against the dollar, all the New York session swings. Okay, if it's two-stage like this towards the close, then use both of them. Get the measurement from the low up to here, and also if it's a second smaller little swing, you want to use that one as well. That low to the high. What's this? What is that? Take out the delineation. So we have a swing low, bullish order block, New York price swing, bullish prices expected, drops down after 0 GMT, optimal trade entry. Your stop loss is down here. You can be a buyer right there. So this is what you would have a risk of this. You could be a buyer there and have a 24 pip stop loss. If you go through the majors, and you'll see how this is, it sets up your London setups, it sets up your Asian range entries, it gives you all those scenarios, but you have to look at them with, well, you have to look at several examples and you'll see it. I'm going to give you the template so you can basically look for this type of thing in price action every day. Nuno, the reason why it's not given to you before the fact is because I already gave you the ingredients. I gave you the homework and I spelled it out for you. I told you that the Aussie dollar was going to go up for the buy stops. So now we're showing you the example how all that stuff outlined. I told you where they were going to take price in Aussie dollar. I told you in the context of the lessons last month how you would go and use it, and this is what it looks like. This isn't a one trick pony setup. Trust me, it's like several times a week. And yes, we'll be doing it before the fact. We're going to be doing it tonight, in fact. So just relax. So it's not complicated at all, and you'll see it's very simple, systematic approach at doing it, but you have to see lots of examples of it, and you'll see how there's a lot of similarity amongst how they all set up. All the buys generally look the same thing. See, what everyone looks at is they do this. Let me take these off. Okay, they'll look at this move here. Let me get this little box out of the way first. They take the fib, and this will give you a setup right there. This is a price swing from here to here. They see that one. That's understanding. No problem. Everybody can see that one. But by using the sessions, intraday's highs and lows, with the context of directional bias, most traders, even people that look at my free tutorials, this is what they're doing. They're taking this low down here up to the high, and they're waiting for optimal trade entry down here with this order block. That's what they're waiting for this. But if you have a two-stage New York close, if you can see that on a 15-minute time frame, use both of them. Then look for a swing low. Remember, ideal scenario, what's better to buy? Just a liquidity void or a fair value gap, or one of those with a short-term low just above it. Always, 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 always try to find the ones that have a short-term low, because there's going to be liquidity underneath those lows. And I know some of you are saying, the large funds are not trying to put their stop loss below that 15-minute time frame, Michael. Yeah, you're right. But there's liquidity below that nonetheless. So they're going to get two birds with one stone. They're going to take it down to fair value, which is the order block. Below the swing low where there's stops. With the directional bias, it's counter to what we expect to see in direction, which is up. So we want to be buying when it's going down. So it overcomes the dealing spread real quick. You won't spend that much time below the dealing spread. Once price starts to move, then you get confirmation. Once it starts to break out and clears the buy stops, then you start measuring each one. Each gap being the magnet that you're looking for. Price should reach for this one. It closed it right there. The whole sell side delivery Once it closed that in, then it retraced back down and then expanded up for what? The fair value gap here. So if we take that, come on, right there, that low on the last up candle here, that closes it in. Look at the reaction in price right there. But you have to see an example of what it looks like. Otherwise, your homework probably won't be as fruitful as it would be had you not done it. All right, so optimal trade entry guarantees us we're in premium or discount. True or false? Okay, okay. It sounded like a loaded question. If you understand what direction the market's most likely to go, higher or lower, and you're using the swings that we outlined in lessons in April, if we do that, does the fib allow you to frame premium or discount with the optimal trade entry? Yes, it does. So now, if you take what you learned from April's content, plus what I'm going to teach you in May, you'll know every scenario what I use the fib for and what swings I'm pulling it on. And then you'll know why all those lessons that look like pure hindsight, even like this one here, even on baby pips days, those are repeating themselves. They have the same characteristics over and over and over again. But you have to look at the intraday price swings because the market's going to drop back through. When it retraces, it's not always coming back down to take out yesterday's higher low. You know, we're just not trying to just take out previous day's high and low. It's already done that over here. So when Thursday made a lower low, taking out Wednesday's low, there's no necessity for Friday to go lower than Thursday because the context is already in place. We have a potential swing low forming. I already outlined in advance that Thursday was going to give you a potential cap on the weekly range. That means it's the low of the week. So if we start off running towards these buy stops, I said that we're probably going to see that price 74.90 going into last week's close, Friday's close, and then we would going into the beginning of this week. Go back and watch the recording. It's a very short recording, folks. They're going to run for the buy stops here and here. That's exactly what they did. So if you take a bigger picture out, and Tim's just said it for me, you can't see it though, what profile do you see here? Market maker buy profile. You have consolidation, leads consolidation, it comes back to consolidation, it doesn't always have to do that. Okay, distribution, redistribution, redistribution, smart money reversal, low risk buy, reaccumulation, reaccumulation. The stops above here is where the market's going to want to reach for if it's going to keep going. It doesn't have to. It could stop right here. It could fail here, but personally I think it's going to go above to take out the stops here. So you see a market maker buy profile that's taught in the free tutorials. When you zoom in real tight though, and your charts look like this, you're not going to see anything. You're too close. It's like your nose is against the tree and you can't see the forest. You can't see anything. You see the bark. You see the coarseness of it all, but you can't see what's necessary to frame out the entire move. So how did I know that Thursday was going to be a low of the week? I taught that in previous teachings in your mentorship, that when we look at the weekly range, Thursday's New York session generally makes the high or low of the weekly range. It doesn't mean that you won't have a little bit of follow-through on Friday and make a higher, higher, lower, low on respective weekly ranges. It just means by standard practice, if you go back and look at weekly ranges, generally on down weeks, Thursday's New York open, that usually makes the low of the week. It usually trades off of Thursday's low, and everybody expects that continuation on Friday, but it either consolidates or pulls back into the weekly range and retraces. So all I did was use the information I've already shared with you in context. Okay, so there's nothing different about that. The question is, when do I use London Open and when do you use New York Open? You'll get rules to that this month. Like I said, you're going to have very detailed templates. Okay, so now looking at last month's content. If we're buying 0GMT's opening price, we have two rules, okay? And I want you all to type it out, okay? That way I know you're paying attention, and number one, you've read it and you remember it. What is the rules at buying 0GMT? There's two of them. What conditions do you do? For most of you, I didn't mention anything about Flout yet. Flout's in this month. For the most part, you got it all. Yeah. Okay, good. Just want to make sure you guys are paying attention because this lesson is one of those lessons that's really, really good. And if you don't really appreciate it by paying attention, it'll just fly right on by and you'll miss the importance of it all. So if you look for daily bias to suggest price go higher or lower, how do we do that? Well, as soon as we see a daily swing low form, right away, I don't care if it's a bearish trend. If you see a daily swing low form, that means you have a low with a higher low to the left and a higher low to the right. That very next day, always expect a 0GMT phenomenon. Look for that because this whole protraction in price, even if it goes up and creates a New York session reversal, that is not something you can just ignore if you want to be a short-term trader intraday. I mean, this is a nice little move. Some of you would be happy if you just got that for a week. I know, I mean, that's enough. But the conditions are exactly as outlined in April's content. The lessons that are there. If you look at all the majors, go back over the last 2 weeks, you'll see those scenarios unfolding. You'll see the conditions that are ripe. They're very, very easy to see it. Let me ask you a question. If we use full average daily range as our whole entire stop, that means if we use an entire 60 pip range for our stop, does that reduce the amount of profit we make? Wow, I got mixed answers. It does and it does not. Number one, if you're looking for extreme returns on the trade, then obviously you'd have to demand at least 180 pips to get 3 to 1. We don't need 3 to 1 if we're doing scalping. All you need is 1 to 1. If your directional bias is on 1 point and you know what you're looking for and you know the liquidity that it's running for, all you need to do is frame 1 to 1. You're going to be trading with 1% risk, never more on scalping. Never, 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 never more than that. If you do, trust me, it makes it very difficult for you to come out of that drawdown because if you have a series of five losing trades, you're down 5%. The best you're going to get on the next 5 trades is, if you had 100% accuracy, is you're back to break even again. So you don't have that repairing factor that you have when you have 3 to 5 to 8 to 10 to 1. So always be very, very highly selective when you're day trading and looking for intraday trades because your 1% risk is many times factored on a 1 to 1 basis. Sometimes you can get 2 to 1. So this is what I'm going to talk about right now. If we know that the rules suggest that we use 5-day average daily range, subtract it from our opening price at 0 GMT, or if we wait for a little bit of a movement down and it takes out a level that makes sense logically to be a buyer at, below an old low, forget this being an order block. By itself, below this old low is enough. You could be a buyer. Because if you use 5-day average daily range and you know if it wanted to come down and close in this void, which it shouldn't because it's made a swing low daily, it has no need to go back down here. That's why there's been such a big movement off that priced in that swing low. They're going to leave that gap open for a while. So it's kind of like a breakaway gap, right? So any movement down, everyone else is going to be looking for a deeper retracement. We don't need that. All we need is the opening price. That price or just below it a little bit. How much below? Well, look below, look to the left of it. Do you see a swing low? Do you see an order block? Do you see a void, a gap, something to that effect? If you see that, that's what you couple it with. And you go right in there and buy at the market, or you put your limit order based on that level plus 5 pips. Now, sometimes if you use a limit order and you want to go back to bed at 8 o'clock and you can't be awake, you'll probably miss some of those moves. So that's why I gave you the first rule was that if you're going to be a buyer or seller, just use the opening price and use your 5-day average daily range, as a basis point. If you know with a great deal of strong conviction that you got this pegged where you're confident that it's not going to go down much more than where you're entering at, you reduce to 50% of the last 5 days average daily range, which is, in this case, it's about, what did we have up here earlier? Right in here. We bought the opening, it was 60 some pips, so 30 pips would be right there. So your stop loss is right there. At the opening price, you're allowed all this movement before you get stopped. On the upside, doing your multiples, right there's your 1-to-1, and it didn't even go up to the fair value yet. So you have almost 1.5 to 1 potential payout using that model. If you're strongly convicted and you watch and you see and you sit up through Asia a little bit and you watch it run up above here, you can take that stop loss and come up just below here and reduce it and then go to bed and not worry about it. So every single trading day, this is what the exercise is going to be basically like. Every single trading day, we're going to have a bias. We're going to force a bias on you every single day. Now, with that bias, you have to execute either on paper or with your demo account based on that at the 0GT opening price. Now, it's going to be up to you whether you're going to use the actual price itself, or if you're selling a little bit above it, or if you're buying a little bit below it. I'm going to leave that to you. But everyone has to participate in at least doing the opening price. If you don't want to monkey around with selling above it or below it, you're just going to miss the experience of growing with that insight. If you're going to be lazy about it and just simply use the opening price, there's really nothing wrong with it, but you're cheating yourself from all the exercise experience of doing it collectively, interactively with us as a group. So every single day, I'm going to send you a chart. I'm going to pick one pair, and you're welcome to do with all the other pairs that I followed, but I'm going to give you one idea that I like, and we're going to watch that unfold every single trading day, okay? And then we're going to look for the opposing PD array that it would reach for. They're not going to be one shot, one kills. That's not the premise behind it. All I'm looking for is 15 to 30 pips. That's all you're looking for. Now, did I not tell you in the free teachings that 25 to 30 pips a week is all you need to double your money annually? That's it. 25 to 30 pips a week net. If you do that with 2% risk, your money by default will double every single calendar year. You don't need to be position trading, swing trading, one shot, one kills, none of that business. All you need to go in and find these conditions that I'm teaching you this month. You'll be able to pull out something, okay? And then now, obviously, you're going to see my trading be a lot more active because it will have everything behind us. But this month, we're going to be very busy. Every single day, there's something. I'm trying to think if there's anything else I want to add to this without going into the meat of the teachings, but I think it's pretty much self-explanatory. So if you watch the recap from Friday, I told you that we were looking for the buy stops that we ran out at the beginning of the week. We're seeing it now. It climbed all the way up into fair value, and it's basically a small little Judas swing. I mean, if you think about what's being shown here, this is a small consolidation and the drop down. Does that not look like what we outlined for a classic London buy scenario? It's exactly the same scenario. Same scenario. So if you look at these templates that I'm going to give you this month, you're going to be able to frame it very systematically. You won't be guessing, because I got a couple emails from a few of you, and one of the guys left because I guess he just couldn't deal with it anymore. But he said that I gave way too many conditions in last month's content. And those conditions, like I said, in the teachings, they're not all there. But they're the ones I have to look at to weigh out whether it's going to be an entry point or not. Not every one of them is going to have a condition that would negate taking a trade. But there are certain things that you have to be looking for that I give you in April's content that line up for a high probability setup, and other ones that say not to do it. And there's going to be times where if you follow those rules and you say, okay, I'm not going to take that trade, and it'll pan out. And you'll cuss me under your breath, or maybe you even send me an email and say, it didn't work here, Michael. You said it wouldn't work, but yet look what it did. A few of you like to give me those report cards and tell me, your method didn't work here, but should have, or it shouldn't have worked here, and it did. And I keep telling you all, I'm not going to be perfect. You're not going to be perfect. All you need is a collective whole to be on the positive end, and more wins than your losses. And that's all trading is. So understand that day trading and scalping, just because it's allowing you the opportunity to go into these daily ranges and look for movements, don't talk yourself into trying to do it every single day, because when you start trading with these insights, if we get lucky and we see a string of winners, okay, and we go win, 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 1 loss, 2 loss, win, 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 loss, 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 win, 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 that will convince you that you're a superstar trader. And it means that there's high probability every single trading day. Even with those couple losses in there, you'll get pip drunk. I don't want you to think like that. Everything still has to have context. So I want you to be more selective after doing the exercises that we do this month and the actual entries and participating. It's to convey the message that not every single trading day is going to be as good as the others. In other words, what we're going to do is narrow down a characteristic that repeats itself on buy days and sell days. So it's just really easy for you to say, I'm going to be a buyer today. I'll wait until tomorrow. It can do this today. It might go up a little bit, but I'm not worried about that. I'm going to buy the next day. That way, the probabilities are really shifted in your favor, and you won't feel that rush or urge, and you won't have that tug-of-war emotional feeling like I have to do something or I missed it. So I will kill all those worrisome things you have in your thinking by the stuff that's being taught this month. None of the templates are ambiguous. They're very specific. They're very detail oriented, and they're highly selective. So when you do these setups, the whole rush factor, the whole emotional stuff, that goes away. And then I can feel confident about going into the other teachings about commodities, stocks, and day trading and index trading in June, while we still talk about this stuff. And also notice how the overlap takes place. Because I'm teaching all that other content that really is useful for Forex too, because it's intermarket analysis. So don't discount that. Don't let me talk you into staying. If you don't want to be here past this month, do what you want to do. I don't care. But there's a strong correlation between what you learn in June's content with the overall marketplace, which helps you ferret out big moves, which leads us right into mega trades in July. Once that's done in August, you get the templates that take you right into the marketplace, and you sit down from a macro perspective. Okay, I'm going to be a day trader because of this. I'm going to be a swing trader and one shot, one kill because of these conditions. I'm going to be swing trading. I'm going to be a position trader. And each one of those have filters that puts the brakes on whether you do anything at all and what conditions are necessary to take the next step. So there's no wondering or sending me emails, what do you think about this? You don't need to do that. You'll know what I would be doing simply by a graphic depiction of a flow chart. It takes you from one thing to the next, and it keeps you at one stage until another condition is met, or reverses you back to a previous stage to see something else be confirmed. If it doesn't do that, you're never executing. But when all those criteria are met, you do execute, and it teaches you where to take your management of your stop loss in each stage and all that business. It's a complete method of looking at the marketplace. The best thing I can do in terms of taking what I know and how I think about price in a step-by-step format, where you'll never have to ask me or see me do a daily video. You'll just know what it is I'm doing. Doesn't mean you're going to be right all the time. It just means that you're more apt to know what the market may do based on those conditions. I think that's it for that. So obviously you can see on the chart we saw buy stops be collected today. They did in fact take the market up based on what we outlined going into Friday's close. Beginning of the week, we would see Aussie dollar reach for all the buy stops. They cleared the board on that, closed in the fair value gap. Market maker buy profile completes above this high, and that's what we're expecting going into by London tonight or New York Open tomorrow. It should have already taken out all these stops. Once that does that, once it takes out and clears the buy stops out on a market maker profile on any pair, once it does this, have this in your notes, I immediately go neutral on that pair, and I don't change bias. I don't look for reversals. I don't look for continuations. I go neutral, and I let price tell me what I want to do with it next. I abandon all my analysis and my convictions about it once it does that, because I don't know what it's going to do at that moment. I have to see what price shows me. It may want to continue higher, then I'll trade it accordingly. Or it may reverse, then I'll trade it accordingly. But just know when we complete market maker profiles, buy or sell, once it clears out its original consolidation here, once it takes that out, basically the setup's done. You want to wait for more information. And I think that's going to be it for today. I don't see anything else I want to talk about for the other pairs. We mentioned consolidation across the board, and we'll need this gap to be violated on the downside to give us continuation sell momentum for dollar, or we have to take out the daily high here to make us run for the buy stops here. So we're probably going to stay in that range, which keeps everything else pretty much blocked in the same similar manner. And that's it. So again, we're going to be a little bit more busier than we normally are. You'll have insights given to you at 8 o'clock my time. You'll have every London session is going to be pre-recorded, so you know what I'm looking for there. And then live sessions in New York. I will not be available for live sessions on Wednesday, Thursday, and Friday of this week, but you still will have all the things I've outlined here. I will be able to do short little video and throw something on the forum, but I just can't spend all this time because I don't know what they're going to be asking of us when we get down there. So I appreciate your flexibility with me in regards to that and your patience, but you won't be without content each day. And secondly, because I have to take care of this week, our first group of lessons will not be this weekend. I will be giving you 3 lessons, not this weekend, the very next weekend. So let me give you a date so you can see it on your own calendar. Today is the 1st. So this Saturday would be the 6th. You would normally get your first 2 delivered there. I'm giving you 3 lessons on the 13th, 3 lessons on the 20th, and the final 2 will be on the 27th. Okay, so the 13th you'll have 3 lessons. The 20th you'll have 3 lessons, and on the 27th you'll have the last 2, just lesson 7, lesson 8. Okay, and the non-disclosure and continuation authorization for payments for this month will be delivered to you by email this evening. You should all have it by 3:30 p.m. New York time. So I think that's it. Apart from that, I'm going to close this one. Wish you all a very good afternoon. I'll get the recording out as soon as I possibly can, and just be on the lookout for Asian session stuff. Okay, because we're going to be doing a lot of stuff in all the trading sessions this month. We'll be doing Asian session trades. We'll be doing New York session trades, London trades, London close trades, and late New York trades. Okay, so you have all kinds of stuff to work with this month. Your head's going to be spinning. So until then, I will get back with you later on this afternoon with a recap and chart index. Until then, good luck, good trading.